Good afternoon, ladies and gents. Good afternoon. Hope you're all doing well out there. Tell you what, can't keep up with this bloody country's weather. I'm actually cold. 32 degrees last week, and today it's about 16. I've got damn trousers on. 1st of June. Hey, there we go. Hello there, Bacon Dude. Good to see you, buddy. Good afternoon, Tony Tone. Good to see you as well, man. 33 yesterday on the car, eh? Yep. You've taken our son, mate. That's what's happened. How's everyone doing then? Good weekend? That's basically it between now and November. Yeah. Well, we've got a week of rain ahead of us. We had a week of sun last week, and now we've got a week of rain and storms. So, not great. There's no consistency in Britain. You know, there's no consistency. It's either ridiculously hot or it's cold and miserable. It's feel for us over here. Yeah, not too bad. Tony Tone was away last week for another holiday. Ah, nice. I'm glad to hear you're getting away, having a good time. Hope it was good. Yeah, I was just saying to Bacon Dude earlier on, I got some trips up and coming. Not only is it's my 36th team. Can you believe it? 36. That's beginning of July. And then at the end of the July, I'm taking my son to North Africa. We've got some nice time away. I'm going to make it out into the middle of the Sahara on camels. And go and got quad bikes, traveling southwest on quad bikes, and then up to Marrakesh, which should be cool. And then we're back for a few weeks, and then we're off again in September to Madeira, which should be really nice. I'm going to hike the legendary PR1 trail and do a few mountains over there at the same time, which I'm really stoked for. That's just me and the missus there on that one. So the first one's the kids, the second one's the missus. So it should be nice. And that'll be my what was it, 3, 4, that'll be my 4 destinations this year. So obviously did the Tatras, Krakow, North Africa, Marrakesh, Sahara, and then Madeira in Portugal. And then that's it, I think. I won't be going anywhere until 2027. Alright, so let's have a think about what's going on this week. We've got, of course, the big one of the week. We've got the NFP on Friday, or we like to say it's the big one of the week, but frankly, probably not going to be too big. The current quote on the data is, what are we looking at? Non-farms. We are looking at a projection of 85,000 jobs being added to the economy, which is a tiny percent change over the last NFP's numbers at 115k. So not many jobs being added, but it is stable. Chances of a surprise event, very, very slim given the US economy, real jobs, wage growth and all that other good stuff. I highly doubt there's going to be any major surprise. It'll be out by maybe 20 or 30k, but again, it's not going to be market-moving stuff. So that's what we've got. That's what we've got to look forward to. Now, I don't think the stocks are necessarily going to be firing on all cylinders up until that time, because they will be holding their breath for the NFP. The markets generally do, but we also have the Canadian unemployment rate out at the same time. So what I'm hoping is that at least one of the two is going to be a surprise, and so therefore we could see a relatively strong event take place in, say, for example, the Euro USD or the USD CAD, if you're trading the Canadian unemployment at the same time. So there could be a decent couple of trades this Friday. There could well be. Nevertheless, I am going to be streaming it live. It will be the full hosted NFP show. But just, I think for the first time, I'm going to be a little bit more pessimistic of my expectations for the NFP and not think that it's going to be something that it's Ultimately not, because I find myself getting disappointed quite often with the NFPs these days, and there's just no point, is there? So if we're just if we're just real with it, probably not going to be a major event, and if it is a major event, then at least we're going to be happy about it. In terms of other economic events taking place throughout the week, we've got a whole lot of nothing. There's not a great deal going on. We've got Tuesday JOLTS job openings. We've got Wednesday, June 3rd's ISM services PMIs for the US. We follow that up with, or we don't follow that up with the ISM manufacturing PMIs this afternoon at 3 p.m. And we've got Australia's BOT, but that really is it, team. We don't have a great deal of economic drivers really shaping market sentiment this week. What it's all going to be down to is, of course, Donald Trump, his latest on the Trump comedy show, and of course the situation with the Middle East and how that's translating into our energy markets and what the prices of those are looking like. That's really where the attention's at the moment. Bacon Dude, hope for the best, expect the worst. Yes, quite right. Well said. So that's really what we're looking at. Now, in terms of the report this week, I've compiled a few decent trading opportunities. We've got the DAX this week looking at a bullish continuation up to the previous highs, which will come first and foremost. Looking at the available setups across the stock indices, that one was what I would think is the highest probable one. Looking at the break close retest, good structure. Previous high there is a nice margin away. It's a strong intraday position as well. It could be done and dusted in the space of a single trading session, but nevertheless, it looks okay. We've got the Euro NZD as well, which is finally broken through structure down to the previous inflection point. So we've got leg one, leg two. We've got the big move up here. So this is the commercial knee-jerk reaction. And then we've come back down to fill the imbalance. This here in itself is an imbalance of price. So I would anticipate now the reversal from these lows and the move back up to at least come to retest this point of inflection where the market came down and we rejected this area. We came up here, double top, and then the big push lower. So there's a lot of technical telltale signs that the Euro NZD is going to be a long, at least Monday through Thursday. So I'd like to think that we can capture a few pips there as well. Moving on down into natural gas, looking very, very nice at the moment. We landed a wonderful nat gas trade last week off of the back of the market report, which was a really, really nice trade, if I don't say so myself, because I was thinking on Thursday afternoon, if it doesn't trigger and we're not anywhere nearer to getting a trigger point, we're going to cancel it. And it ended up triggering later that day, and it completed in the same day. The whole entire thing was just 1 day's trading for a really nice 1 to 2.8 or a 1 to 2.8, 1 to 2.9 or something like that. So that was really nice to see. And then we've got gold, and I decided to put gold on the run here because I think it does have the possibility of a push into liquidity followed up by the buyback from the previous lows. So what I've tried to allude to here is the push into liquidity first. There won't be any trading opportunities until that happens. But then we could look at taking the trade between this area here and targeting this area up here, which might be a nice trading opportunity for us, possibly from tomorrow onwards. So they're the bench that I've been looking at. They're the best ones that I could source this morning when putting the report together. We'll just see how they go. Now, moving on down to the market challenges. Of course, this isn't going to take long. We've got the US employment data, which is registering as a 6 out of 10. And we've got the CAD unemployment rate, which is registering at the moment as a 3, unfortunately. And the NFP at a 6, I think is quite optimistic. Probably end up being a 4 or 5, I should expect. But that's what the algorithm is telling us. In terms of the SSV this week, we only have one major notable call out, that is natural gas, which is showing at a 57.61% bought in total commercial orders. Quite an interesting figure there. We did actually have another reduction in VIX volatility, which means that the markets are looking at being even more sluggish this week than they were last week. Definitely something to pay attention to. Euro NZD, DAX, and gold are all very, very much on the fence here. So most notable call-outs, low market volatility at the moment, and natural gas looks incredibly bid. Moving on down into page number 2 then, economic and order book impact report. The US employment data, non-farm payroll, average hourly earnings, wage growth, so on and so forth, unemployment rate is all combined to be a 7 out of 10. CAD employment rate is actually registering as a 3 on this one as well. So not much in terms of market impact. I think this is because it's a 6.9% forecast. It was 6.9% on the previous figure, and it was 6.8% on the previous figure before that. So we've barely moved a muscle in the last 12 weeks. It's probably going to be the same again. So, let's just try and take it with a pinch of salt here. It could be a decent event. It probably won't be. But like Bacon Do said, hope for the best, expect the worst. Now, as we move down into the money flow trends, this is obviously commercial and retail liquidity all combined. Again, there's not much in terms of notable callouts. The indices are sitting at just above the kind of 53% threshold, showing slightly more bought. But I really wouldn't put too much weight behind this in terms of seeing some crazy market breakouts or something this week. Commodity prices very much balanced at the moment, and fixed income markets aren't moving a muscle. So there's not a great deal there to show. In terms of equities in focus, excuse me, we've got some decent picks for you guys this week. Rocket Labs is taking up the spotlight equity of the week. This is one that's actually dropped in a couple of times before. They do a lot of defense and government contracts and stuff like that. At the moment, we've had defense take the number 1 spot in terms of institutional buying interests by billion-dollar investment over the weekend. And that's had the number 1 spot, I believe, now for the last 3 weeks. So a hell of a lot of money being thrown into defense, which is probably why this one is looking quite nice at the moment for a potential investment opportunity. We also have Tallow, ACLS, MLI, and MP up here at the moment, which are showing relatively good buy signs. You'll have to double check the numbers of the fundamentals on these, of course, as you all, or most of you, now know how. But for those of you who don't, of course, we can, every single Wednesday morning, we do investment hub sessions. At the moment, they are still in the educational setup of doing a sort of private tuition style group session, I suppose you could say. If you want access to those, I can certainly give you the links. That's not a problem at all. And that's a wrap on the report, ladies and gents. So for those of you out there on YouTube and inside the room, everyone who's listening in right now, this is for you. The information provided in this market analysis report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial markets involves significant risk and may not be suitable for all investors. Okay, so if you'd like to read more on the disclaimer or any of the T's and C's, please head over to www.the-utc.com and go and check it out for yourself. Thanks a lot. So let's call it a wrap on the report then and move our way over to TradingView so we can get everybody set up for this afternoon's US markets, the exciting, action-packed side of things. Let's hope we get the week off to a good start. So the US 30 Dow Jones at the moment currently trading at 51,207. We've had a sizable move to the downside this afternoon over the course of the last hour from 12 to 1:30, where we've seen a commercial knee-jerk reaction just taking place. The breaker structure for this one is actually pretty clear, and it's got excellent trading margin for continuations to the previous high. So if we're looking at this area here, for example, for a target profit, I would ideally be looking for the breaker structure at around this area in here, which allows a really nice margin for the market to flex and breathe without us getting wicked into any dummy trade ideas. So then I'd be looking at the long, targeting up at the highs there, and a stop loss nicely tucked in below the breaker structure point. This is yielding around a 1 to 3.3. Very nice, well-balanced trade. There's nothing more that needs to be said or done about this Dow Jones at the moment. We do have a really nice strong margin. It was the same trade that we took last week for a 1 to 3.37 there. And we certainly could look at the continuation back down, but it would be a 15-minute BCR. Okay, so if you do want to take this one, it's a 15-minute bearish BCR, followed by the breaker structure of this level in here, and then we would short from there down to the mean with our stop losses at the 50% point. That's yielding a 1 to 4.26. That's way too aggressive. We don't want to take any static trades like that. We can move our target and our stop losses and stuff and make it like that at the end, but we don't want to be doing that right now. So what we're going to do is bring that stop loss up to around about that 1 to 3.26 area. Gives us a lot of room to breathe here. And at the end of the day, the trade's still going to have a great deal of defense. So very, very nice as well. Let me zoom out for a moment. I'll take a snapshot of that. There we go. So next up on the list, in the US tech stocks, the NAS 100. So NAS 100 at the moment, very much range bound. Nice high up there. I'm already piecing this together very easily. So we've got the target profit up at the highs. We have the entry, which is about there. We want to make sure we clear through all of these highs there at the moment. There is definitely a descending level that wants to be on everybody's attention. Okay. And so if we want to get the long, it's most certainly going to be above the one, around the 30.48 area. So entry, target, and the stop loss at around a 1 to 3. Again, stop provides a lot of really nice movement down there for the price. We've also got this area in here, which is all of these highs and this high. Not quite this one, but that's enough for me. If the market breaks through the descending level up through both of these areas of liquidity, it means we've definitely got some commercial buyers on side and we want to be joining them for the ride. I did not mean to make that rhyme. I'm going to stop there, actually. Everything I say is rhyming now. Right, but anyway. So we've got, that's set up in the NAS 100. I'm not interested in taking the short, have to be honest. Don't really like the short. This low down here worries me. These highs over here worry me. There is not a path of least resistance. And so therefore, I will only be long in the NAS 100 this afternoon. Now, because of that, the best outcome for us is to short the S&P 500. And let's just have a quick look at what we're dealing with here. So that's the point of liquidity. And then we've got another one down there. So that's a sizable margin, but we have this area in the middle here as well, which is a bit problematic. So I think the best course of action would be to take the trade between these two areas. Yes, the market comes through and we could possibly squeeze a bit more profit, but it is a Monday and I don't want to go messing around. So we're going to look for a short entry about there, targeting down here at around 75.87. Stop loss on this one, again, we can bring up to around a 1 to 3, and we're still getting a fantastic stop placement with a superb risk reward ratio. So it's, in terms of the setups themselves, we're looking at some decent quality here. This is some high quality trading. We just need to see if the market's going to provide us with the volume that we need. That's really the only factor remaining. But it's a nice series of trades, nevertheless. Now we move into our energy markets here. Natural gas is coming down. We've had a big sell-off so far. It's down minus 1.2%. Do we want to short it at this area? Probably not. We were looking at the break close retest continuation to the upside. Market's actually failed. It has filled the gap completely, but the market's now trading even lower. So it's going to be interesting to see what it does. But at this moment in time, there's not going to be the trade there for me. I don't want to give any of my money back from the long that we did last week. So I'm just going to let that play out and see where it goes. In terms of UK Brent, let's go up to our anchor chart here, have a little look, 15-minute time frame. So that doesn't make sense. We've got the break close and possible retest taking place. Yeah, probably it is. We've got the low down here. So I suppose what we could be looking at is the breaker structure there. Entry, target, and your stop losses. For a nice little intraday trade. I don't really like oil long though. Possible breaker structure at 96.46. Target profit at 97.50. But there is problem areas in the middle of it. So it's not got a great path of least resistance, not like the short. Okay, moving down into the metal markets. Gold currently trading at 45.06. We are no closer to achieving liquidity at the lows. High at 45.80 has been untouched since the last time we were there. So I'm still very confident that the next course of action is for price to reach liquidity down here and then rally back. So there's nothing we need to do at this moment in time. That's a sit on your hands trade. Nothing we need to do at all. The only thing that you might want to do is put an alarm in. So if you stick an alarm in there, at least we get the alarm. We can go and set the trade up. And good afternoon to you, Coratim. So yeah, that's the metal markets. Now, FX space. For those of you who are new, i.e. Bacon Dude, and you haven't been with us every day, I have taken a step back from trading the FX market for the last, I don't know how long it's been now, maybe 6 weeks, due to a poor win-loss ratio across most of the FX market due to chop and range. And I've just been focusing my attentions primarily on commodities, broken between energy markets and precious metals, and then the indices, both European and US. Yeah, okay, cool. Yeah, no worries, mate. Yeah. So that is still the case. Now and again, I will drop in a FX trade, generally from the report. We cover those. But yeah, day to day, it's not really about the FX space for us at the moment. Looking at this, however, and everything of what I just said being applied, this Aussie CAD is potentially a goer, to be fair. Yeah, it's potentially a goer. So I'm happy spreading the word about the AC, because I will probably have a stab at that trade myself. The only other one is the Euro NZD. So if we come down here and check this out, Euro NZD is looking pretty good. We're only looking for, this is the breaker structure in here, really, the long-term trade right the way back up to 202, but we're not looking at that one today. I would say break this one down. We've got a really nice intraday trading margin. The breaker structure works as well. If we look at this high here, it's that high there. So just drag this one across. Entry, target profit, and the stop loss for around a 1 to 2.9. And that's a pretty decent trade as well. Coratim, can you have a look on gold on higher time frames, weekly or monthly? Yeah, of course I can. Let's check out the weekly. Monthly's a little bit too consolidated for me, but weekly's good. So weekly on gold is looking like a crazy long breakout. I would say that a commercial sell-off needs to take place more so than it has already. The moves that you can see that are of a sizable duration are directly as a result from US Middle Eastern conflicts. So they are not anything to do with profit taking or anything like that, or the normal commercial flows that we see. I think after the market falls around here between sort of 44 and 4600, we will probably see a continued sell-off, and gold may reach as low as 38 or possibly even 34. That's where I would be thinking long term. I do not believe that the market is going to go for another leg up at the same size as where we're at the moment, based without any economic drivers or anything else. We also need something to happen with the Middle East in order to get this one moving. Otherwise, it becomes dormant and very, very tired, which is what's happened over the last, most of the time. Apart from the particular outliers here and there, that is what's happened most of the time over the course of the past months, whatever. If there's no major volatility from news, gold generally does a lot of this, and that is what gold does. Very slow indeed. So if there's something to shout about, gold is the one to shout, but right now again, not much to say. Gold on the monthly time frame looks hellishly overbought, although I don't actually technically believe in that, because people will pay whatever they believe the worth of the item is. But yeah, I mean, it does. There's no beating around the bush. It looks hellishly overbought. It just does, doesn't it? But again, the monthly doesn't tell me anything that the weekly or even the daily doesn't. And I think it will pull back further. Maybe over the course of a couple of months, maybe 4 months, we could, see gold at 34, maybe 32. That's where I'd have my money. That's where I'd be, really happy buying back in at around that point and feel safe about it. Just wait for Cortim to finish his message, guys. Thank you. I am waiting for 39. Okay, 39. Yeah, that's not too bad. That's actually quite pessimistic, I would say. I mean, 39 is there, roughly. So yeah, I think that's absolutely fine. I think it probably will reach that. I think we'll have another range in here for a while. Maybe another 1 to 2 waves of the range. But I strongly believe 42.80 will be broken free of. And then it's a straight drop down to around 39, isn't it? So I agree. I think that's a good idea. All right, team. Well, that's it from me then for this afternoon. If there's any questions or anything like that, please feel free to fire them off into the chat and we can pick those up in good time. We are currently at 2 p.m. GMT. So the US opens up in 30 minutes time and we can take it away from there. So have a good one, team. Good luck this afternoon. The UTCF Fund Alerts will be updated as soon as the session comes to a close. And if you need me, I'm here. Pleasure as always, guys. Great catching up with you. Good to see you all. Take care, and I'll see you then. Bye-bye.